So let's begin with the current account. The current account is maybe the most popular one. I don't know if you have heard about this term, the current account, or the current balance. Some people also call it like that. Sometimes it appears on the news. But this one is very relevant because it accounts the money that leaves the country or enters the country uh, on regards of these activities, which are very important for the economy. Goods, that means, I don't know, maybe a car, a computer, oil, those are goods, right? Services, like maybe an airline ticket or maybe consultancy from a law firm, those are services or financial services. Investment income, I will explain this in a second on more detail, and unilateral transfers. Unilateral transfers are when someone sends or receives money, but without giving anything on exchange. So the best example of that are the remesas. That's how we call to the money that Mexican people living in the US send to their families back in Mexico. They send the money without receiving anything on return. So let me go step by step explaining uh, um, examples of each of these things. And also something very important, you can see here that it says debit and credit. I want to explain what does that mean. Let me start with that because I think that's very important. Credit or debit is similar to accounting. If you took an accounting course or if you're an accountant, you understand that in the cash account, when you talk about credit, it's something positive, right? Credit is something good for you or the firm, or in this case, the country. And debit is usually something bad, right? That means the money leaves the country or the company or the person. So in the case of the balance of payments, this applies to every account. In the case of the balance of payments, credit means that the money enters the country. That is very important. We're going to practice a lot, and I think it will be very clear in the end. But remember, credit is positive, something positive, that the money enters the country. So let me tell you an example. Imagine that Mexico sells a car to the US. So in that case, Mexico receives the money, right? Mexico sends the car, but the money enters into Mexico. So that will be credit for Mexico, and for the US, that will be debit, right? So credit positive for Mexico, debit negative for the US. And it's always about money, not the car. We don't account for the car in this thing. I said earlier, I think in the last video, that this is like the cash flow statement because it only focuses on money, on cash, right? So goods, and sorry. So credit, it's positive when the money enters the country, and debit is negative when the money leaves the country. And there are different types of activities or transfers or transactions that affect the current account. I already said that at the beginning of the video. Goods, services, investment income, and unilateral transfers. Goods, as I said, are like a car, a laptop. In here, it's some tools. In here, it's an airplane. So those are goods, right? And if you see an example or a transaction where people are exchanging goods, it will be part of the current account. Then the next one are services. So for instance, in here, it is a cruise. So a cruise is a service. So that will be part of the current account in the sub-account of services. So if you paid to go on a cruise in Greece, that will be debit for Mexico and credit for Greece because Greece receives the money, right? Um, that is for services. I'm going to jump to unilateral transfers. Unilateral transfers, as I said, the best example are remesas. So when a Mexican worker living in the US sends money back to their families here in Mexico, that will be part of the current account in the unilateral transfer sub-account. And for Mexico, it will be credit because Mexico receives the money, and the US, it will be debit because they lose that money. It leaves the country. So finally, let me explain investment income. Investment income is the income, the cash flow that is generated through investments. So one good example is like maybe you bought shares from Apple and Apple is paying dividends, right? Maybe this year they sold a lot of iPhones and they are paying $1 dividend per share. So that dollar that is paid to all the shareholders is paid from the US to Mexico, right? Because you are the owner of the share, but you live in Mexico and Apple is in the US. So the money moves from the US to Mexico, and it will be part of the investment income subaccount. So investment income is all the cash flow that is being generated by investments, right? Another example is when a company like Walmart has subsidiaries in Mexico. So that is also part of investment income. They have an investment in subsidiaries here in Mexico, like Walmex, which is the subsidiary of Walmart in Mexico. When Walmex send their profit back to the US, that would be investment income because it's money that it's being generated from an investment. If we think about the example of when you buy a share from Apple, the money that you paid for the share initially, the money that you paid for buying the share, it will be in the financial and capital account. I will explain that in the next video. But the money from the dividend will be investment income. It's just that difference. I will explain the financial account and maybe it will become clearer. So that will be all for this video about the current account.